Welcome back. This week, the gross domestic product quarterly report was released at 4.9%, a staggering rise from the prior 2.1%. We can see it's the most significant quarter we've seen in quite a while, but what we're going to see in just a moment is it may not be as good as what the numbers indicate. The gross domestic product is made up of four subsectors, including PCE, personal consumption expenditure, that's consumer spending, business investment, government expenditures, and net exports. So our core number over here, 4.9%, that is a headline number, but we can see that government expenditures surpassed all other categories at a staggering 26% growth, while consumer spending up 7%, business investment 8.4, net exports down 10.3. Taking a look at the GDP reports going back to July of 2021, so this is 2 years of data, what we can see is that lately we've seen rather modest reports that we know, of course, except for the green histogram bar on the current report, which is government expenditures. Notice how much higher this is than the other categories, as well as how much higher than any other category going back to January of 22. Now, also January of 22, we expect big numbers because this is, measured on a quarterly basis, but reflects growth post-COVID crisis. So certainly the vast majority of our growth in gross domestic product has been the result of government expenditures. Now, here are the four categories we spoke of. We have business investment. Two categories. Fixed investment, that's business equipment, software, manufacturing equipment. These are hard assets that are not easily purchased. They don't move around a lot. And then we also have the change in private inventory. That's when businesses replenish the goods that are on their shelves based on consumer demand. If there's more demand, the companies have to go out there and buy more goods to replenish their stocks. This is what business investment looks like. The current quarter is up 8%, surpassing the prior quarter of 5%. Before that, it was negative 9. But we can see while it's encouraging 8% business investment, it's not a fantastic number. Certainly not as good as what we saw back in 21. We have government spending. Now, this includes federal, state, and all local spending. Government expenditures up 26% this quarter, far surpassing the prior report of 4%, 7, even back to 23% growth April of 22. This is much better than that. So government expenditures certainly are a positive note within the GDP report. And we have net exports. Now, exports, when we sell goods overseas, that adds to the GDP. We're taking in more money. Conversely, when we import goods from overseas, when we spend US dollars to purchase overseas goods, that takes away from GDP. So we want to export more than we import. Well, the current report shows us a 10% in terms of net exports, meaning imports versus exports, we're still importing more than we're exporting. So it's 10% to the negative side, following the prior report of 9% and 22. We want to see this in positive territory, which it certainly can be, but just not now. Now, of course, the biggest category, I don't know the biggest, but the most important category is spending, consumer spending, personal consumption expenditure, which, by the way, was also released earlier this week. It's broken down to three categories: durable goods. These are products meant to last more than 5 years. Cars, appliances, furniture. Non-durable goods are meant to last a short period of time: clothing, food, and fuel. And then there's services like banking services, healthcare, and education. So consumer spending is broken down between those three categories. Well, this is what consumer spending looks like this quarter, up 7%, following the prior report of 3.3, before that 8.1. But notice the trend. Going back to October of 21, the trend is your friend and the trend is to the downside. These seem to register progressively lower candles as we move forward in time. Certainly, we're not surpassing the prior report of last year this time, or I should say, this time at the beginning of the year or any quarter prior to that. Now, if you're curious, this is what PCE, consumer spending, looked like between 2007 and 2010. We like to talk about this period of time because it's a period of time of great economic growth followed by a huge market sell-off and economic downturn. Well, we see PCE was at 6.3% early 2007, 5.8, 5.1, and eventually, took a nosedive to the downside, registering a negative level October of '08. And certainly that coincides with, the S&P 500 also, really taking it hard. So consumer spending really dries up, obviously, when economic conditions are tough. Now, going back to 2007, it's the same period of time, 2007 through 10, we see the dark blue line, that's the overall GDP number. Notice in particular one thing very interesting though, government expenditures, it's in the yellow. The yellow bar marked this very big high. This was April of 2008. Now, everything else was either neutral or slightly to the downside at that point. But notice for some reason or another, and we really don't know the answer. If you have an idea, please chat it in. But we're not exactly sure why all of a sudden government spending surged just as the economy in April of '08 looked like it was on shaky ground. Meanwhile, business investment, the light blue line, was in negative territory. Consumer spending was barely positive. The only bright mark over here was government expenditures. And once government expenditures dried up, all of a sudden, really the economy, went to the downside in a hurry. Well, this is what government expenditures look like now. In the midst of a report with, I would say, lackluster numbers, government expenditures this quarter up 26%. Again, government expenditures in 2008 was the only bright mark on a rather dismal GDP. And it seems like, well, I don't want to say the GDP this report was dismal. I would say it's neutral to, maybe a little bit to the positive side, but certainly government expenditure seems to be a very, very big part of the positive GDP report that we read just the other day. Very curious how all of a sudden we have a surge of government expenditures just as the economy seems to feel like it's on shaky ground, just like it did in 2008. So again, to recap, current report is 4.9%, but we know most of this is the result of government expenditures of 26%. The rest of the categories, they were to the positive side. Well, correction, not exports. Exports were down. Consumer spending, we'd like to see that higher than 7%, certainly. Also, business investment, we'd like to see that higher as well. Now, these are not all equally weighted. Some weight is given to one category as opposed to another. But the fact of the matter is, it's very curious to see why government expenditures seem to be surging while all other categories seem to be lagging to some extent. Thought it was curious to note these inferences. We have a big economic calendar next week, and we'll be sure to update you with any significant changes along the way. We hope this has been helpful. We look forward to seeing you back soon.